Good morning and good afternoon. Thank you for joining us for this webcast, Digitisation and Data in South Africa, where do corporate treasuries stand? Before we begin, just a few housekeeping items. We will be recording today's session. The on-demand version of this webcast will be shared with you via email in the next few days. You can also access it in the next few hours using the same link that you've just used to log in. The webcast is being streamed through your computer, so please, for the best audio quality, make sure your computer speakers or your headset volume is turned up. For the best viewing experience, we recommend closing any programs or browser sessions running in the background. And some networks do cause slides to advance more slowly than others, so logging off VPN is recommended. If your slides are not progressing, push F5 on your keyboard or Command R on the Mac to refresh your browser page. At the bottom of the screen are multiple widgets, and I'd just like to highlight a few of these. If you have any questions, you can submit them through the Q&A widget. We will try and answer all questions during the session, but if we run out of time, please, we will follow up with email, and please note we record all questions. There are additional materials available in the resource list, so please download those you might find useful, and you can find out more about our speakers using the speaker bio widget. We value your feedback, so please complete the pop-up survey at the end of this webcast. I am honoured to introduce our moderator, our Global Head of Sales Strategy and Execution for Trading and Banking Solutions, Candice Stott. Over to you, Candice.
Thank you so much, Renee, and good morning and good afternoon to everyone that's joined today. I'd like to welcome everyone to today's webinar, where we will be discussing corporate treasury digital transformation trends in South Africa. Thank you again for joining us. As Renee mentioned, my name is Candice Stott, and I will be the panel moderator for today's session. On behalf of Refinitiv, we are proud to host today's panel in partnership with the Association of Corporate Treasurers. Just a quick reminder, we do absolutely want to receive your questions, so please, be as interactive as possible. Ask the questions throughout today's session, and we'll make sure that there's time at the end to answer some of those questions, and those that we don't get to answer, we'll make sure we send back replies. Today, I am very grateful to be joined by our panel of industry experts who I'm going to quickly introduce. Firstly, we have Jan Bucas, who is the Group Treasurer at MultiChoice Group. MultiChoice is listed on the Johannesburg Stock Exchange and is Africa's leading video entertainment provider, a company known to many of us through their DStv, GoTV, Showmax, and DStv via streaming services and brands. They have around 20.9 million customers across 50 countries. Jan is a qualified chartered accountant and also holds a master's degree in forensic accounting. I would also like to call out and congratulate Jan and his team, who were the overall winners of the Best-in-Class Treasury Solution in Africa in 2021 in the Adam Smith International Treasury Awards. Next, we have Paul Fenwick, who is from ABSA. Paul has his CFA and has been in the market space at ABSA Group Limited for the past 12 years. He has filled numerous roles, including the head of e-commerce, Sales South Africa, before moving into the role of head of digital markets for ABSA regional offices, successfully overseeing the separation program from Barclays across Africa and FX. Paul is currently the head of ABSA's Markets Business Bank, Sales South Africa, as well as assisting the franchise to build out its new stack of architecture and respond to clients' needs in treasury operations for FX, international payments, and treasury management. Last but not least, we have Gabby Oppenheim, who is from Refinitiv, our data and analytics business within the London Stock Exchange Group. She is the trading proposition specialist for Sub-Saharan Africa, and Gabby has been with the organization since 2013. She has more than 20 years' experience in global markets, and before joining Refinitiv, Gabby worked for both as a trader within ABSA and RBS in Johannesburg. Gabby is passionate about supporting financial markets development across the region and through their automation of trading workflows. She holds a BCom in quantitative mathematics and is currently busy with her honors. Welcome, everyone, and I look forward to today's panel. As a short summary of what we're going to cover today, just want to quickly remind everyone what you've actually signed up for and what we'll be taking you through for the next hour. In today's session, our panel is going to focus on three main areas. One around operational efficiency and effectiveness, looking at how one can create and add value through intentional digital transformation. Secondly, looking at topics around open data and the importance of developing capital markets, API technologies, data sharing and integration between corporates and their banks. And then lastly, looking at staying one step ahead of technology advancements and key trends. Really, to set the tone and start off with today's topics, I'm going to ask Jan his first question. So Jan, really looking and tying in the theme around operational efficiency and value, I was wondering if you could take us through an overview of the digital transformation at MultiChoice Treasury over the past few years, and what were the key outcomes the team wanted to achieve? Thanks, Jan.
Thank you, Candice, and good morning, everybody. I think I will start with saying that no matter what you do, adding value to the broader business has to underpin, everything you set out to achieve within Treasury. You can never look at Treasury in isolation. It has to be a value add and a strategic business partner throughout your organization. So we've been on a digital journey for the past 2.5 years. And we tried to capture three key focus areas or elements during this journey. Number one has definitely been to take a step back and have a clear distinction in terms of what you need versus what you want. We live in an era where there's so much new technology on a yearly basis that becomes available. You may want a sophisticated machine learning algorithm cash forecasting system, but your business may not necessarily need it or not even have the data set to warrant it. So make a very clear distinction on that part. Further to that, you must realize that there's no one-fit-all solution. So, what's worked for us at MultiChoice may not necessarily work for another organization. Depending on your size of your company, you may need to relook and reshape solutions exactly to what is required and custom to your business. And at the start of going digital, make sure that you've got a well-documented phased approach in place. You're definitely not going to solve everything in a big bang, and make sure that you set key targets and prioritize what is most important. So on the back of that, if we look at MultiChoice over the past few years, on the FX side, we went from phone dealing, signing manual confirmations, uploading trade details into a TMS to now dealing electronically. We've got automated confirmations via Finastra. All of that is integrated into our treasury management system. We've got daily rate feeds from Refinitiv to obviously allow with daily transactions as well as reevaluation on our FX positions. And then, excuse me. And then we're currently launching and rolling out our more sophisticated hedging module in our TMS, where all of our trades that we're doing are now automatically linked to our hedge items. We're populating hedge documentation within our treasury management system, and then also producing journals to be uploaded into SAP, which is our ERP. So it's been really kind of a phased approach and a step approach to where we are now. If we look at on the cash side, we've got close to 600 bank accounts within the group. So cash visibility is obviously critical for us, not just from a treasury perspective, but the overall cash management for executives. We manage that currently via Swift network with Fides on MT940 reporting, and that also gets integrated directly on a daily basis into our TMS, which makes management a lot easier. We also then had in past, we had I think as many companies may do, a manual Excel based system when it came to forecasting. Business units would populate data sheets, manually roll it forward, send it in. It would then take somebody on my team 2 to 3 days to consolidate all of that, check formulas. And then we built our own custom system within SAP BPC. All of those forecasts are now consolidated automatically. We've got much better insight in terms of forecast versus budget, forecast versus forecast, how much of variances relates to spend versus FX movements. etc. So we spent a good year in building that solution, and it's tailored for our business, and it's yielded great benefits, and it's also added a lot of value to our business units in terms of utilizing this system as well. If you, on an overall basis, and I think this is probably the most important thing for me, looking at our journey, is we freed up people time. There was a lot of time spent on manual actions, which is now no more, and effectively allowing us now as a treasury team to engage more with business. And that's critical. I mentioned it before, you need to be a value add and a strategic business partner. And getting rid of manual actions and items where you can definitely allow you to have much broader conversations with your business rather than just being an operational cost center, which you want to avoid, from a treasury perspective.
Thanks so much, Jan. Super important points there. If I can ask Gabby the next question. Gabs, in terms of helping share some of the trends that Refinitiv has seen across corporate treasuries and how these trends are helping enhance corporate treasury operational efficiency, could you share a couple of your examples?
Sure. Hi, Candice. Thanks for the question, and morning, everyone. From a corporate treasury perspective, I'd say we've seen an uptick of our services across banks, corporate treasuries, asset managers, and even money exchanges, all looking for solutions to help access markets and venues. These trends include an increased appetite for market data, specifically from an independent market data source such as Refinitiv. We've also seen an increase in requirements for FX execution tools, money market evaluation tools, and news. We know that data is a critical dimension for any treasury function, and good data offers the potential to make better informed and timely decisions. Especially for a corporate treasury customer such as Refinitiv, with regards to cash forecasting and risk management. I like to think that corporate treasurers require access to actionable information to enable both the tactical and strategic decision-making in real time. And I think this is where Refinitiv plays a really, really vital role. Having access to things like research, forecast data, which is all available through our desktop solution, okay? Having access to improved insights allows corporate treasuries to make more informed strategic decisions. Our solutions also provide, our clients with data and analytics. And I think these assist our corporate treasury customers to better manage cross-asset financial risks. Through the digital transformation journey, we've actually noticed that our corporate customers have become digitally enabled across their treasury workflow. Okay, this has obviously, like Jan mentioned, freed up a lot of time, okay? So allowing them to spend less time with transactional obligations and allowing our clients to shift their focus towards opportunity identification. Okay, the return on time, I feel, is a value add, and as a result, our desktop solutions have been built into their decision-making processes, allowing our corporate clients obviously greater efficiencies across their treasury workflow. I would say that another trend that we've come across is the accelerating shift towards treasury centralization. Most recently, I would say over the last 10 years, we have seen electronic execution from corporates, customers gathering pace, with multi-corporates using our FX solutions for consolidating of their group treasury functions. Obviously, this is all in the aim of optimizing liquidity through additional FX venues. The uptick of electronic FX execution has also resulted in an increased requirement for multi-bank execution platforms, such as aggregated FX pricing through systems like our FX All. If I have to add another trend, I'd most probably say it would be that we've observed is the uptick of technologies such as treasury management systems, and the need to feed these systems specifically with data to help power corporate operations. These systems are obviously fast becoming key to automating and monitoring and handling core treasury functions relating to cash and liquidity management, asset and liability, FX, and even interest rate risk. Our post-trade analysis ensures that our corporate customers can achieve smarter insights, obviously greater transparency, faster decision-making, specifically when it comes to their relationship banks. So if I have to sum it up, I'd most probably say that those are most probably the common trends that we are seeing in the corporate treasury space at the moment. Thanks, Candace.
Thanks, Gab. I think, Gabs, you've coined a new phrase, which I think is return on time. And I think it complements quite a lot of Jan's feedback in terms of very, very effective choice and decision making, and not just, thinking about everything that you want, but being more focused on what you need. I know we partner a lot, so working with Paul and Paul's team, I'm going to ask Paul a quick question. Really, I've thrown two questions in one for you, Paul, for extra measure. How does ABSA currently support corporate customers, such as MultiChoice and others, of course, to better support them on their digital transformation? And is this helping them unlock value across their businesses? And then the sneaky question added to this is, can you also share some details around what some of the bigger challenges are faced by banks and their clients in terms of building processes or propositions across Africa?
Thanks, Candace. I think, Jan and Gabby have kind of highlighted a lot of the themes that we're kind of seeing from a bank's perspective as well. Jan spoke about the digital transformation that Treasury has gone over the last sort of 5 to 10 years, and we are obviously in a position where we need to try and support that and obviously make our services more digital and make them available to clients such as MultiChoice through various channels, whether it's internal channels or whether it's through vendors such as FX or and Refinitiv, etc. I think the biggest trends that we're seeing is the automation of services. So taking as much manual processing out the window as possible, removing the operational risk and the issues that you would generally see with a lot of operational mistakes, confirmations, etc. And through our own digitization, we've realized the importance of making our services available in more platforms, making them more accessible. So really trying to fit in with what the corporate treasury is trying to achieve. So, for example, we recently enabled on FX4 the ability to trade Pan-African across the ABSA group, which was never possible before, and we enabled that a month ago. We've enabled orders onto the aggregator platforms. We're expanding the services that corporates can use in these type of platforms, whereas before it was very focused on single dealer platforms. We put a lot of emphasis on building the depth of product available in the single dealer platforms, and we continue to do that for clients that can. Sorry, I'm hearing that my sound is not so great, so I hope it's better now. Great.
It's getting better, Paul. Don't worry, we can hear you.
Okay, cool. So it's taking those services and making them as accessible as possible. We're also looking, some key themes that are coming out aside from South Africa is expanding product capabilities. So, we find a lot of clients are diversifying their product set when it comes to trade execution. So before, where you found a market that was very predominantly spot traded is moving into the derivative space, whether before it's swaps and options. So we see a lot of demand starting to come out of there. And as obviously treasuries become more sophisticated and more accurate in terms of their sort of modeling, etc., they're looking at other products to kind of offer them that extra yield as opposed to just fixing themselves to spots and forwards. We're also trying to enable or build product depth in markets outside South Africa. So enable 24/5 trading in a lot of SSA currencies. Enable a lot more liquidity and forward pricing, spot pricing and options, etc. So, we're seeing this market starting to evolve and starting to grow quite nicely, with the demand coming particularly from global corporates and Pan-African businesses, as they're looking to get those services. And as mentioned earlier, they want those services real time. So the ability to see balances, the ability to execute trades, confirm trades, everything is converting real time. So our sort of objective and drive for the next few years is how do we support corporates in the service. And then on your second question, what are some of the key issues or challenges that we as a bank face? The biggest challenge we have is the regulatory environment across African countries, incredibly complex. There's no one country that has the same regulatory constraints as the other. A lot of developed markets, there's a lot more ease when it comes to doing cross-border transactions from a regulatory perspective, whereas on the African continent, every single market has their own rules, regulations, etc. So as we try to digitize, we've obviously got to take these environments into account. And the biggest challenge is making those complex environments as easy as possible for the front-end user to kind of navigate their way through and guide them through the process. You've got Botswana that has no market regulatory requirements. You've got Mozambique that's very, very much regulated and requires an excessive amount of documentation. There's also liquidity constraints and pricing concerns within a lot of these markets. So those are really the areas we're putting a lot of focus in. We're working with regulators across the markets to try and help standardize a lot of the nuances that we find in each of the markets. And we've recently launched the ABSA market index for the African countries. So, we rank each country according to the constraints and the openness and the pricing and the access to different types of products, which is helping to kind of drive those discussions with the regulators. Yeah.
Thanks, Paul. I'm keen to actually read through some of that analysis, so maybe we can share a link at the end as well.
Yes, definitely.
Really helpful. I feel like in the first section we've been able to cover quite a lot of ground in terms of overcoming challenges that many of us who've been working across these markets have seen for many years. I mean, the trusty old topic of regulation and the continuous work that needs to be adapted in all these markets, and continuing to play front foot on helping where we can in terms of corporate treasury decisions and platforming. Looking at those challenges and really looking at how we overcome them from an opportunities point of view. A lot of your examples, Paul, I think resonate with the audience. Jan, given those challenges that Paul's just highlighted, and based on your experience, can you share some of the ways that your firm has overcome some of those challenges whilst continuing to manage day-to-day treasury risk?
Yeah, sure. Now, I want to reiterate that, doing business in treasury in Africa, it will definitely keep you humble and on your toes. It's never a dull moment. So yeah, Paul has touched on a lot of it. For me, I think first point is make sure that you've got a very well defined and documented treasury policy. That is obviously the biggest kind of steer in terms of how you manage your risk across your organization, but especially on our side in the rest of Africa as well. Having that detailed knowledge of the markets where you operate in is of vast importance, whether it's from a macro perspective, an exchange control perspective, as well as then the digital side, knowing what is possible and where there's still limitations. It's also something that we try and do on our side is we do leverage our relationships out of South Africa where banks have a presence in the rest of Africa markets. So there's no point in me trying to build up relationships, with 20, 30 different people across the continent. It's never going to work. So our first point of call is always to engage with our key relationship teams in South Africa. They then get a full understanding of what it is that we want to look at or achieve, and they can get the correct people on board that's sitting in these countries. So it's very important that you use those relationships extensively. Gabby touched on it. Where possible, if you can centralize across the continent, there definitely is benefit to that. Dealing with one central team, getting a lot more value for your organization in terms of the centralization structure that's come through. So do make use of that where possible. We also started this year where we effectively invited all our key banking partners to a session where we gave them some insight on, what we are focusing on in the next year or two. So, they've got direct knowledge of, what it is that we're trying to achieve. That in turn then enables them to come forward with focused proposals and solutions. We do encourage all our banking partners to always, reach out on any development where they think it might add value to our business. And, we listen to that and we look at that. But we felt that, kind of next step for us is now to become specific. I mentioned it during, the initial question that, freeing up people time, we now got time to engage more with payments teams within MultiChoice. And now we're in a position where we can bring those teams and the banking teams together. So you need to at all time make sure, especially on the Africa space, that you're fully aware of what's going on, and so that you're prepared effectively and not caught off guard. And that's where your relationships and your key stakeholders such as your banking partners plays a critical role.
Thanks, Jan. Super helpful for me. Some of those attributes you've highlighted. Adaptability, making sure that you communicate with your banking partners, and really sharing what some of your vision and strategy is really helps everyone in terms of sort of partnering on helping you accomplish your desired outcome. So some really key points there, allowing you to free up time. I think, Gabs, you've had some incredible opportunities working across many of the markets on our beautiful continent, helping, build out efficiency and deepening of capital markets. I know that's very close to your heart across the continent. Just looking at how some of that work translates back into corporate treasuries such as MultiChoice. And really with their exposure across so many countries across Africa, can you share some examples of work that you've been a part of?
Sure. Thanks, Candice. I mean, I think Jan and Paul mentioned it. I think one of the biggest issues with doing business in Africa is a regulatory issue. And from a Refinitiv point of view, I think the most impactful initiative that Refinitiv has embarked on to help, from a regulatory point of view, but more so to build efficiencies across Africa, has been through what, we call our central bank initiative. This initiative has basically allowed us to assist less developed markets to become more transparent, through the automation of things like FX auctions, market tracking systems, and through automating trading. We all know that with the scarcity of liquidity across the SSA markets, it's become crucial, really crucial for African countries to be able to protect their FX reserves, but also to have the ability to tap into additional pools of liquidity. So I feel that, leveraging technology and deploying efficient FX and trading infrastructure systems can enhance the transparency, accuracy, and I suppose credibility to these markets as well. If I can take Ghana as an example, during 2019, we were approached by the Central Bank of Ghana to assist them with the system that would help promote transparency and standardization of their onshore trading. After a few months of collaborating with the regulators, we launched our anonymous electronic FX service called Refinitiv Matching. Okay. One of the main driving factors, I would say, for launching matching in Ghana was to eliminate the duplicity of FX demand that the market was seeing from the corporate space to the interbank market, which technically was distorting the FX markets. Our corporate clients, like MultiChoice in the region, have benefited from the launch of matching in that they now have access to transparent price discovery, as well as the automation and digitization of FX trading flows in Ghana. Across the region, we've leveraged off our large regional partners like APSA to assist Refinitiv in building out efficiencies across the continent, such as something that I like to call globalized, centralized treasuries. It's a mouthful. So technically what we are doing is we are enabling global corporates. I mean, Paul did touch on this, right? We are enabling global corporates with onshore FX liquidity in countries that they operate in. This makes sense. I mean, if you consider that Refinitiv has the largest FX trading venues with the deepest pools of liquidity across the continent, liquidity providers rather across the continent. So, for example, I mean, as Paul mentioned, if a corporate wants to deal with, let's say, Mozambique directly, they can do it out of South Africa without having to have dealers in those countries. So basically, the globalized, centralized functions will assist our corporate clients by reducing their costs as they don't require multiple accounts in multiple locations. Paul also touched on it. We are currently working with our regional partners with the development of the FX derivative markets across SSA, where we are basically helping to build a community around the contributions of FX options volatilities that banks will be able to offer their corporate clients, these derivatives, and I feel that these will be a value add to the services. Specifically, this is being rolled out in Kenya at the moment, but we're looking at rolling it out to the rest of East Africa. I'm just wary of time. Another example of how we've assisted in developing efficiencies across the region is by broadening and deepening the capital markets across Africa. Refinitiv has spent many years, focusing intensely on developing and deepening fixed income instruments and analytical data across the continent. We've worked very closely with leading market participants, such as banks and brokers, to use our systems to publish and distribute their pricing for instruments like FX, fixed income, and money markets. These contributions have assisted in developing and growing those secondary bond trading markets across the region, and have also helped to develop benchmark yield curves for the region. Following on from all this data, Refinitiv has actually developed technologies to automate the workflow that will facilitate the negotiation of secondary fixed income bond trading amongst banks, corporates, asset managers, and obviously all of this has real-time integration with CDSs. So from an Africa perspective, I would say those are most probably the efficiencies that we've worked on, which come to mind. Thanks, Candice.
Thanks, Gab. I think that was a really broad array of examples. I'd like to think that an approach, I know we tend to speak a lot about FX, but this is a multi-asset class, deepening of instruments that are used, the concept of lending credit, and deepening how we work across the continent with partners. This is absolutely not done in isolation in any shape or form. It's listening to corporate treasury. It's making sure that we understand the participants both in local markets and in international markets, and how they complement each other and need to work together with brokers to enable all of the sort of transparency of pricing and data. So Gav, some really great examples. Paul, over to you in terms of looking at some feedback from ABSA specifically, and trends that banks are seeing from a client demand perspective. Can you share what some of the efficiencies are and what you currently are supporting and what you're planning to support going forward?
Great, thanks, Kenneth. Yeah, I think it's kind of an expansion, I guess, of the topics that I've spoken about up to this point. But I think the first and foremost, the most basic requirement is ease of access to all the services that we offer in a single portal. I think that's something that clients have been begging us for quite a while. Not having these disparate systems that service different parts of your value chain. One would be international banking, one would be FX, one would be domestic payments. And, we traditionally built those in very isolated or silos because they were very different to each other and required, different skill sets and complexities to solve. But, we've started moving to a single portal where you can access across the entire value chain of products with one single sign-on, access to all domestic, international research, etc. So that's the first and most important thing that we're trying to obviously address at this point in time, is just making those services as easy as possible. And I think it's probably a challenge I should have highlighted a bit earlier, but banks are built off these really complex legacy systems. We've often been at the forefront of adoption when it comes to technology, etc. And with that comes the challenges when technology changes or code changes, or where the market requirements change, and how you keep those systems up to date and make them available across the continent. And, you can often have, multiple countries within the same organization all working off different systems. So, the demand for our services is increasing. People want the digital access, particularly, since the pandemic hit at the beginning of last year. And it's about converting those legacy systems into modern technology that can allow these modern platforms to kind of service and interact with the client. So that's at the base of what we're doing. And then some other key trends that we're starting to see, and some demand that's coming from our clients, particularly in APIs. Building out our services into single modular services. So like a rate service, for example, for FX, if you just need it for accounting purposes, making that available to our clients, a deal service, etc., that we can plug into their systems as opposed to them coming to our systems to interact with us. Up to this point, you predominantly have to sign up for a banking system to access the services, etc. But, we're putting a lot of focus in building a catalog of services, and clients can come and just pick and choose which services they want to do. So that's quite exciting, and I think a very new frontier for us in particular, and something we're going to build out quite aggressively in the next couple of years. And then just expanding on the automation features, to just continue investing in technology that allows for automation to happen, whether it's pre-trade services, so your research, your forecasting, etc., making that available, not just through PDF documentation, but, making that feed into other systems. Your trading services being as broad as possible, so supporting aggregators, supporting single dealer platforms, API technology, etc. And then post-trade services, particularly confirmation matching, where we rely quite heavily on Swift confirmations, but building out those services to kind of automate the treasury's end-to-end process. That's kind of like where we are right now and what the trends are that we're kind of the demand from our clients.
Thanks, Paul. I felt like I was listening to somebody internally there for a second. A lot of the same language and a lot of the same applicability, to be honest. I think openness is critical, being able to allow choice. So the way that, we interoperate with you, and certainly the way that we need to interoperate with corporate treasury systems, all other institutions and banks and brokers that make this ecosystem that we operate in work, requires openness and integration. And unfortunately, the one common place that we all, I think, come from is certainly from a banking and service provider perspective, we are working off legacy systems. And perhaps, corporate treasurers are on a journey that is slightly more nuanced in being able to choose newer platforms and systems. That's obviously not always the case. There are a lot of legacy systems in place that need to be undone. But openness, adaptability, and API integration, all critical through sort of pre, during, and post-trade. I think choice is quite important, and allowing for that choice is key. I just want to quickly highlight everyone, there is a question and answers button in the platform that you're using. I'm not sure if people are just shy today and we don't have that many questions coming in. So I urge you in the last few minutes, if you've got any pressing questions, things that we've raised today on the panel that encourage you to want to ask additional questions or ask for some collateral ideas, please help me as the moderator. I'm sure that there's some questions that the panel would love to answer and some they might not want to answer, but let's put some questions into the Q&A section, and please, if I can encourage at least one or two of you to ask a couple of questions, that would be really helpful. I think just in terms of looking ahead, staying one step ahead, ensuring that we're future-proofing our organizations. Gabs, if you could just quickly share some initiatives that Refinitive's been working on to allow corporate treasuries to stay ahead of the curve.
Sure, thanks, Candice. Okay, so I can think of a few, but not wanting to give too much away on any particular initiative. We are currently working on an initiative for the South African market. It's quite a big one. And basically, it'll just, the aim is to allow for better collaboration between buy-side and sell-side clients of ours. Like I said, it is a market-wide rollout, and we're hoping to have that rolled out before the end of the year. Paul and Jan have both been in discussions with us about this, so hopefully we'll have that soon on the pipeline. Another initiative is, we've worked on a couple of product enhancements which are aimed at automating treasury workflows. For example, at the moment, any trades that our customers do that are concluded on our FX aggregation platform, FX All, can be directly imported into our desktop solution. Okay, so basically what this does is it provides the ability to run fair value mark-to-market analysis on all the FX trades within our desktop solution. I think that's pretty good, especially when it comes to automating treasury flows. Another initiative I'd most probably like to mention, and I think it's quite a big one, is Refinitiv is currently working on a FX trading mobile app. Okay, I think with obviously the COVID-19 having forced a lot of financial organizations to adopt remote working, there is a growing acceptance that traders should be able to execute outside of the office. And so Refinitiv is obviously working with a number of partners to develop an institutional grade mobile FX trading app. And this will obviously be combined with, the security that goes with it, et cetera, et cetera. So off the top of my head, those would most probably be the three big initiatives that I think would assist, corporate clients. Thanks, Candice.
Thanks, Gabs. Looking forward to some more information on that first initiative being shared. Jan, also given technology advancements, where do you think corporate treasurers should focus going forward?
Yeah, Candice, it's almost a webinar on its own, that one. For me, I think the underlying principle is really from our team and my perspective is I don't think there's an expectation for you to become a specialist in all of these areas. but it's definitely important to have a very good base understanding of these technologies. If you don't understand the technology on a base level, it's going to be very difficult for you to determine whether there's benefit within Treasury or either the wider organization. So there's a few of the usual suspects that's been around for some time. So AI, machine learning, RPAs. I think those have been kind of deployed wider throughout many organizations over time. Then definitely something which is getting a lot of attention these days is digital currencies. So separating that between central bank digital currencies and then the likes of Bitcoin, Ether, and the rest. Obviously, CBDCs can have a significant impact on a variety of things. So, it's very important to keep track of what's happening. On the back of that, the possibilities of blockchain technology that underpins a lot of these developments. Then you've got, obviously, decentralized finance, which pops up everywhere. And you need to have a clear sight of one, how you look at this from a treasury perspective, but then as well as from a customer perspective. So you can never look at these things in isolation. So I would definitely say, upskill yourself in terms of what it's about, and make sure that you can have a intelligent conversation with somebody, who is a specialist in the field. So lots going on. So coming back to initial comment, keep the focus and make a clear distinction in terms of what you need versus what you might necessarily want at the end of the day.
Thanks. I think you may have helped answer a question that did come in around looking at South African corporate treasuries from an AI perspective in that answer. So thanks, Jan. In terms of, Paul, from a banking perspective, looking ahead at the sort of next 5 years, some of the biggest innovations and transformation trends that you're seeing, and just things that could help corporate treasuries know what's coming their way?
Yeah, I think there's a couple of trends that we're starting to see on the horizon, and some interesting conversations that we're having with global market participants, regulators, etc. And one of them is, obviously moving to more of an open banking type environment, similar to what you're seeing develop in the European market. We've had some interesting discussions with JP Morgan out of the US, Goldman Sachs, some really big global corporates in terms of how do we, create an environment where you can share services, account creation, account accessibility, not just on our infrastructure, but make that globally available, irrespective of what bank you currently work with. That's still very early on for us. I mean, I know the European Union is quite more down the road on that, but we could see quite a bit of movement there. The second thing, and as Jan highlighted a bit earlier, is particularly in general ledger technology or cryptocurrency. We've currently got quite a few discussions going on across the continent, not just here in South Africa, but in markets like Ghana, as an example, where they're starting to investigate and to see how they can issue, almost a hybrid crypto market, a rand-backed crypto type currency that can allow for general ledger settlements, etc., and for that more real-time capability and transparency on these transactions. So I think, the major trend is really just around real time. So making everything real time, making balances real time, intraday. You generally get end of day runs, etc. It's more about taking these services and allowing corporates and global institutions to kind of see their positions at any point in time, day or night. It's also about expanding, as I highlighted a bit earlier, expanding product capability across the African continent. Helping those markets to develop. There's a lot of inefficiencies in a lot of the markets due to illiquidity, lack of participants, etc. So it's really help and build that out. And I think that's going to be quite key over the next 5 years if we want to help the capital markets evolve and create greater trade, inter-Africa trade to happen, given we are.
Thanks, Paul. Hopefully a couple of gems shared there on the future outlook of some topics that are certainly making their way into the fold around digital currency, adoption, certainly some unique nuances around integration of fiat and digital currency technology coming up loud and clear there. I'm going to start looking at some of the questions, just in terms of, thank you very much for the flood of questions. I should have reminded everyone far earlier, because it seems like it's definitely got some juices going on the questions front. So if I can ask, here's a question. How do we encourage digitalization in illiquid and small markets where pricing may be the main selling point? I don't know, Paul, if you could help take that question.
Yeah, I think it's talked to a couple of points that we raised a bit earlier. It's just, a lot of these markets, if you look at the contributions that are made into these markets, the way the markets are priced, etc., they're very static, and they're very they're driven by in-country traders updating their prices, which is a manual process at this point in time, where they literally type a price into a spreadsheet and it updates across all platforms. The biggest constraint you have in these smaller illiquid markets is just the number of participants in the market. So it's growing the number of participants willing to price and to trade in there. Starting to see, a lot of global entities, particularly in the remittance spaces and the cross-border spaces, looking to kind of start to become providers, of prices in markets and become the go-to the go-to organizations in terms of trading these types of products in these very exotic currencies, if I can call them that. But the biggest thing to unlocking illiquidity is just increasing participants, increasing the number of players in the market, and obviously the more you have, the more reliable the pricing is, the more and the better it can evolve. And we obviously realize that being part of these countries, we need to take a step to help with that, and that's why we're pushing quite hard to become more sort of tradable and transparent on forward pricing, evolve other products within the market, so it's not just a spot market that's being traded. We're also starting options pricing in Uganda, Mauritius, Ghana, etc. So we're trying to kind of help the capital markets evolve. It's going to take time. There's no silver bullet to it, but I think as demand in these markets come and as they become more open to international players coming in, then we'll see those markets evolve and develop.
Thanks. That's really helpful. I guess it takes all of us in that process, right? Both, domestic participants and local participants and international participants to bring that story together. Jan, a quick question for you. In terms of, what changes have you seen in the audit process approach since you started your process, both external and internal audit? Could you comment a little bit about that, please?
Yeah, I think a big benefit is obviously it's a lot easier and quicker for us to give both sets of auditors information that's required. As part of the journey, you obviously take them along. It's key for them to understand, the systems that you have put in place, how it operates, the controls that's built into those systems, the security aspects, etc., so that they can ultimately rely on the data that they get from these systems and have comfort around that. It's still an ongoing process. Ultimately, where I would like to get at is, once we fully complete it, is to have sign off on, full system reliability, and, through that effectively cut down, number of audit samples and testing required, and thereby reducing, audit fees for the group as well. So we're not there yet, but yeah, definitely has been a lot of benefit. And we definitely saw it now during COVID and working remotely from home. Being in a position to give the auditors all the data remotely that they require to do the audit. So, there's, as I said, the value of what you're looking to do definitely needs to go beyond treasury. So always keep that in mind.
Working as a team, Jan, working as a team, I think is important. Paul, another question that came through, quite a number of smaller companies in South Africa outsource their treasury. Are there any benefits around that approach that you've seen?
Yeah, we actually work very, very closely with the outsourcers. We see them as quite an integral part of the treasury management process. They offer a skill set that's often lacking in supply in South Africa. It's very difficult to often manage a treasury when you don't have the skill set or the knowledge of the markets or the capabilities to invest in the infrastructure or the systems, etc., to kind of help you do that. And I think that's where they offer a lot of value, is that they can guide you through all the views of what's happening in the market, what type of products you could use to hedge, what's available out there. And they can kind of guide you through that process, which I think is a massive value add for smaller treasuries, particularly those that are just looking for that extra alpha in terms of their treasury management so they're not constantly recording losses on their income statements, etc., because of FX.
Thanks. Another question quickly about Mauritius. A couple of answers probably from the panel on this, but Gabs, on local markets in Mauritius, FX dealing is very much done on the phone. Sorry, it's just jumped. We have very much requested to have price contribution from all banks on a common platform to improve dealing efficiency and transparency. Can anyone comment on how we should go about having all banks contributing on a common platform to service corporations? Probably Gabs, you first, and Paul, you might want to add something here. Or Jan, how you approach your Mauritian market.
Candice, I'll let Paul go first, if that's okay, and then I'll jump in.
Yeah, sure. I think, we're obviously on the journey to kind of digitize the Mauritian market, and we're working quite closely with our colleagues in country. I think the regulatory environment makes it quite difficult to kind of fully digitize unless you have the tools in place to kind of navigate the regulatory environment. Every day the regulator imposes a bid and ask price that we can't trade outside of during the course of the day, and they'll publish that at the beginning of the day. And if we trade outside of that because markets move aggressively or prices update, we get a phone call from the regulator saying, why did we allow this price to go through? So we're busy building some tools to kind of manage the kind of the floor and the cap of the market on a daily basis, so that we obviously don't breach regulatory controls that the regulator has imposed in those markets. I've been involved in Mauritius for the last 5 to 10 years, and it has been one of the markets where digitization has probably got more hurdles than anywhere else. But I think we're getting there, and I think you're going to see quite a bit of evolution in the coming 2 to 3 years in that space in particular. And I think they're starting to kind of catch up on the digital journey, and we should see quite a bit of advancements happening soon.
Thanks, Paul. Gabs, anything more to add there quickly?
Thanks, Candice. Yeah, so just to echo what Paul has said, I mean, we are also working with the regulator and a lot of the banks as well. From a Refinitiv perspective, I mean, we do, we've got a presence in all the banks. So working with the banks to try and aid those contributions, which in effect will make those markets more transparent. But as Paul mentioned, it is a journey and might be hopefully a journey that ends quickly, but yes, and yeah, that's from our side. So we are working with the market.
Thanks, Gabs. I'm going to go back to a question around AI, and specifically, if we could, Jan, if you could add a little bit more meat to the bone on the AI topic. So, looking at corporate treasuries in South Africa from an AI perspective, any further informational trends that you could contribute?
Yeah, look, I think you very much have to have a place for that to add value. AI, machine learning, if your underlying kind of data and what you're trying to solve is not there, you're just going to waste your time. Within our organization, we have seen a lot more deployment of AI, and you obviously have seen this on some other companies as well, in terms of customer service, how AI is deployed on that basis, similar to RPAs, which is used quite widely in our shared services department. So I don't think treasuries and treasurers should go and say we have to do this. If there's no need for AI or machine learning, then that's fine. If it doesn't, it's not going to add value, then you don't do it. But if there's, value in the rest of your organization, then you can bring those business partners together with know-how in banks, other fintechs, and companies the like. So, really make sure that you focus on what's required and applicable to your entity.
Back to the needs and wants, Paul, where you started, Jan, as well.
Yep.
So thank you very much. We're closing up now. Thank you so much for our amazing panel contributions, for all the questions that came in. We've enjoyed spending the last hour with you. I hope you enjoyed your hour with us. Really just, covering the skills and planning considerations needed on a digital transformation journey. There are resources in the platform that I strongly recommend you have a look at. One of them is looking at the Treasurer's Toolkit, looking at some of the skills and the DNA that looks at corporate treasury going into 2025. Some really good takeaways there, as well as joining our newsletter, which is a monthly publication with lots of gems of helpful insights and information. Again, thank you very much to our panelists. It's been a pleasure hosting everyone today. Please do share, and remember to share your feedback. All answers to questions that weren't answered, we'll make sure are answered. And we really, really look forward to seeing you on future webinars. Thank you again, and have a really pleasant rest of your day. And thank you to our panelists once again.
Thank you.
Thank you.
Thank you.